Despite the moderation of the headline inflation rate in December 2022 to 21.34% from 21.47% recorded in the previous month, the Apex Bank took a hawkish stance by further increasing the benchmark interest rate to 17.5%. This is the first interest rate hike in 2023, and it suggests that the Apex Bank is continuing with the policy rate it started in 2022, with the hawkish rate policy started in 2022. Recall that the CBN had raised interest rates by a cumulative 500 basis points last year in a bid to tame the rising inflation rate in the country. Now, Vincent, I'd like to talk to you because I see that since this hike was announced, we haven't spoken. I've been able to speak to the other people on various platforms. So this is the first time I was speaking with you since the rate hike. So tell me, was this what you expected?
Thank you very much. To some extent, there was some, I would say there was expectation of rate hikes.
Okay, yes, go ahead. All right, Vincent, if you can hear me, I wanted you to just talk about, your expectation and what came out and, just what you think informed the CBN's decision or the MPC decision.
Yes, like I was saying, can you hear me now?
Yes, I can.
Yes, like I was saying, it was expected to some extent that the CBN was going to hike, there was going to be some level of hike in rates, but the level of hike is what was not expected, because when you look at the moderation inflation for December, it wasn't much. And so looking at the environment we currently have, the macroeconomic environment, we're still looking at price pressures. We are talking about the removal of subsidy coming on, increase in price of fuel. So the environment is still very much challenged. So we didn't expect that there was going to be a reduction.
Okay. All right, Mr. Vincent, please hold your thoughts. We'll take a break now. When we come back, we'll continue. We'll come back to you when we come back from this break. Thank you for staying with us. Vincent, before we went on that timeout, you were talking about your expectations and what the CBN had just done. Go ahead, please.
Yes, like I said, it was expected to some extent that there was going to be some increase in rates, because looking at the moderation in the inflation in December, it wasn't much. We saw it reduced from 21.47 to 21.38. So, and looking at taking a caution from what happened in the major economies where there was some level of rate hike, we expected the CBN to do something about the rates for the MPC meeting in January. But the level of hike, it was what was not expected. We're thinking about maybe 20 to 50 basis points, but if CBN decided, the MPC decided to go as high as 100 basis points. And that was because of we are still in a very challenging environment, looking at the increase in the price of petroleum products and the increase, the upcoming increase, removal of subsidy. Definitely, these are going to have an impact in terms of inflation. I think those are the things that the CBN were looking at, despite the impact it's going to have on the economy in terms of growth. But we're looking at stabilizing the economy in terms of price before you now think of growth, because if you don't have price stability, you won't be thinking of growth. I think that's why they took the decision in terms of the rate hike.
All right, thank you. I'd like you to react to his last statement, talking about price stability and growth. Let's have your thought on that.
No, actually, I would say that even with the adjustment in the rate, CBN or monetary policy, yes, like you just mentioned, because we are seeing pressures on price, because I believe that the new increment in this January for fuel and also for energy, in terms of electricity tariff, we also have a way of impacting cost. But one thing to look at, even the increment we just saw is on the expenses of the economy, because there are two types of economy we run here. One is the financial market, one is the real economy. From what we have seen, the announcement has kind of boosted activities in the financial market. We put in the real economy that will supply what the financial market will be dealing on a big problem. Why I mean problem? Cost of funds for MSMEs, businesses will be high. Why for those that invest in the financial market to be smiling? Because rate hike will automatically mean increase in yield and rate on all the stuff. But only that the reverse is the case for us. We are seeing at end of TB on Wednesday, and you can see that the financial market, for me, there's a divergent or disconnect between the hike in NPR and what we saw in the life of the Treasury bill, different tenor, 91, 92, and 91, 82, and 364. It tells you that those in the financial market now, are trying to look at it very well. But from my own point of view, what I just saw in that is that, you can see why the World Bank and the MFA was crying that if care is not taken, that the aggressive rate hike will plunge the global economy into recession. But when we saw China suspending their restriction and reopening the economy, we saw that stability started coming because most companies, economy that either export or import from China have free business. That has also increased activities, and also the latest figure that came from US in terms of their GDP. US like for me like a pace setter. When you see anything changing in US, it has a way of spreading down to any other economy. But when you see that US is positive, you can see that their dollar becomes a bit softer and decline. You can see that demand for goods now increase. Even they too can do more business because people now becoming. That tells you that the fear of recession to a level will not be general. It might be for some particular climate, not the whole world as a board, because it depends how you manage your. Down here, the way we are managing our own. If you look at the recent move, I would say that it's a way for the government to manage their borrowing. From my own point of view, if we are seeing that government is dropping TB from almost 7.8 to, or it tells that government don't want to borrow at a high cost, but they are putting the economy at the expense, because if you increase rate for those to boost their business in the economy to go for any bank loan, to be high for them. But if you are
getting your funds cheaper
because you are coming to the market, you are finally dropped the rate. But that is I said.
I mean, can we go with this your analysis? Is that what exactly is happening?
No,
that's what you think.
No, really, because if you want to borrow, because if you look at their budget for this year, that is why people in the fixed income were over exaggerated. We were happy that even with adjustment, we want to see rate in the next day on Wednesday move to around 12 or even 10. But the surprise that at that day they saw it dropping from 7. People think that to be either 9 or 10 to show that to signal that yes, rate is set to move in the 150 ball. The first one a decline, extending for the four times, that means 5 consecutive times we have seen rate decline in that market. Tell you that the government is also thinking a way they can borrow what at a cheaper, because I tell you, cost of servicing debt in Nigeria has gone high, and if no care not taken, we might not see any money to what to do the redevelopment and drive our economy in terms of infrastructure. I feel that is the way, but know how if you want to borrow from people, you must encourage them. As I said, for anything that's happening between now and end of the earning season, investors should take advantage of it, because I believe that going to the future, they still want to get to adjust it so that they can attract more from people they want. Because if you want to borrow from me and you're bringing it down, I might not. But the good thing is that go and check after dropping it from 7 to 7.8 to 30. We saw excess what we call over subscription for the day that people there's money everywhere, liquidity in the financial market. That's why they continue to drop. If there's liquidity excess, no subscription for me, tell that money is there. For me, they might need to leave it now for a while before they start. But let we investors in the market take advantage of this window to make money in the equity market, and also wait for. That's why I say you must always keep your eye in the market to look at what is driving the trend and where fund. But fund is very, very important. It flows to where there's opportunity. Now that we're seeing,
talking about funds now, do you think this is a good time for companies that are not yet listed to get listed, so at least they can probably with time they can also start having access to funds without necessarily having to pay,
Well, I like the good of what it is also with encouraging. That's why the NSC has also to come with another way of encouraging listing. Only that in a part of the world, and especially our market, I don't believe that cost of listing is part of it is driving people away from coming to the listing. If they can make it more attractive, people might come to, because I tell you, borrowing money on the high cost than going to approach an investor. I think it's better to come to the market and do well and pay dividend than borrowing from your nose and unable to survive. That's going to affect the company bottom line at the end of the day. I think this is what I'm thinking around it. But I believe that for investors, let's take the opportunity we're seeing to make money in the equity market.
All right. Well, Mukhtar, I'd like you to talk to us now. Some market operators have actually said that the latest hawkish stance of the Central Bank of Nigeria would dampen investors' demand for the equities market and encourage them to navigate towards the fixed income market. What are your thoughts? Is that what we're seeing playing out? Mukhtar, if you can hear me. Okay, so I guess we still have Vincent with us. Vincent, can you hear me? All right. Okay. So very quickly now, I was asking a question about how that some analysts, I mean, the moment that announcement was made, I started saying write-ups, headlines saying that the equities market is hard hit.
I can remember what bad news for equity market.
Bad news for equity market and all that. So what do you think about that?
No, I said it all. I agree with that to that level, because ideally in a financial market where we understand higher interest rates also have effect on equity space, and that's why we're thinking that firms are leaving the equity space to the physical market. But the reverse was the case, because there was disconnection between the yield or the rate that came at the end of the primary market option for TB for that Wednesday, and everybody was surprised, and that has changed it, the narrative as we speak now, until there's another Treasury bill program offer where we'll see that adjustment. But I believe that now that the last, let's take it, because I believe that today, I told you on this platform like that on that. Let's wait to see on Wednesday and Thursday that this thing will affect the market. And so on Thursday, the market rebounded. The West Today, the market rebounded. If you look at numbers of gainers compared to losers, you know that market people are really taking advantage of the low price position for dividend, knowing that this dividend paying period between now and end of March. I believe that for me, we might see that, but that's why I say investors should not be carried away that there's a kind of disconnection between the NPR and what we're seeing in the physical market. But for this time at last, let's take advantage of one thing. I believe that because this is the earning season, and if we get the election right, whether there's a hike in rate, it won't matter again, because that gives you that confidence to start coming that, oh, whoever that comes is coming to another new course. You have seen what has before Nigeria before now, in terms of security, economy, police, all those ones. Whoever that is coming now, by now, should set up who's going to know the team that's going to change the narrative for Nigeria. If not, I think there is hope for Nigeria.